Throughout all the years I have traded, all the strategies that I tried and failed, I have found the strategy that actually clicked for me and got me from unprofitable to profitable day trader. So in today's video I'm gonna give you a complete guide on how you can do it too, so make sure to stick till the end. So let's get into it. So just before I actually get into the strategy and everything, I want to show you my profits using this strategy. So you can see these are my profits from only 1 month of trading, and this was not even some kind of special month. It was actually a very slow month for me. So you can see such a small amount of trades and the profits aren't the biggest, but you can see this curve right here, which is just 4 months of profits, and you can see I have hit exactly $100,000 in profit mark. So I'm not talking about some strategy that I don't even trade, because I trade it every single day live in the markets and I'm making consistent profits with it. And also, instead of complicating the charts with indicators, some useless analysis, we are going to use direct 3 steps. So you're going to see very simple 3 steps that are going to make so much sense once you actually understand them, and there is not going to be need for 3 different indicators and looking at the charts for 5 hours, because it's going to be very simple and it's going to be very straightforward with only 1 hour of pure chart work. So the goal of today's video is to make profits in 1 hour after the market opens. So now you can trade Asia, you can trade London, you can trade New York, it's up to you, but it is very important that it's some kind of market open. So you want to trade within some kind of market hours, and you don't need to watch the markets for a few hours, you only need to do it for 1 straight hour. The second thing is I want you to become consistently profitable day trader after implementing this strategy. So after this video you are going to go to the charts and you are going to know exactly the steps that you need to follow to actually put on profitable trades. And you can also forget about daily bias, thousands of fancy concepts, or looking at charts 24/7, because that's what we don't want. We don't want to 9 to 5 the charts. We want to use trading as some kind of freedom tool to make money and to enjoy actual living. So as I told you, it's only 3 simple steps that we are going to focus on. So the first step is going to be to mark out liquidity on the chart. Now I'm going to show you exactly how to do it on the chart and what is the logic of the liquidity, why we are even marking it, why is that important, and then we are going to wait for the manipulation of those levels. So we are going to wait for the market to manipulate liquidity, and then after that I'm going to show you the special entry that I use, how to exactly place your stop loss and exactly place your take profit. So the step number 1 is going to be very simple. It's going to be to mark out liquidity, and what liquidity is in the simple terms, it's highs and lows in the market. So any kind of high and low in the market is liquidity. So all you need to do is mark out highs and lows. So you can see this is low, so that is liquidity, this is high, and that is liquidity. You can see this one right here, this high was already taken, so this liquidity is already swept, so we are going to move it out of the way. And you can see this slowdown here, it was never swept like this, so it's a valid liquidity. So what we need to do is mark out liquidity points. So we have this liquidity and then we have this high right here. So all we do on the chart for the step number 1 is mark out highs and lows. And why are we going to do that? Some kind of logic, so you know why you are actually doing it, because the market is always going to hunt lows and highs into the market. Why is that? Because everybody who is going to enter into the market, all the retail traders, that 95% of them are unprofitable, so all of them are going to put their stop losses. Let's say they execute a position right here to the upside, they are going to put their stop loss on this low. So everybody, when they enter the market, people who enter shorts from here are going to put their stop losses right here. So all of them are going to put their stop losses on highs and lows. So what banks, market makers, and big institutions are going to do, they are going to try to sweep these lows and highs. So it's going to be movement like this. It's always going to be some kind of sweeps. They are going to sweep out those stop losses, and they're just going to make movements based on what they sweep. So if they sweep this low down here, what the market is going to do is going to go to the upside. And you can see right here a beautiful presentation of all the people who are going to want to enter from some kind of their zone right here. Let's say this is their supply zone or demand zone. They're just going to enter without any sort of manipulation, and what is going to happen, market is going to sweep them, and after that market is going to reject from that low because it's just swept it, and now the market is going to want to go to the upside. And the timing of this is going to be after the market opens. So New York market open is going to be from the New York time of 9:30 a.m. Eastern time. So we hop on the chart at 9:30 a.m. Eastern time, and we are going to wait for some kind of manipulation, and then after that we are just going to wait for the actual sweep to happen, and then we are going to actually enter the market. And also one really important thing is a fair value gap or a imbalance in the market. It's really simple, but we are going to use it for entry, and also it can be added confluence to the trade. So you can see right here we have this fair value gap right here, so it's just from the first to third candles wick. We want to see this hole or an imbalance, and you can see how the price is actually respecting it. So if we closed with a body below it, that means that we didn't respect it and that market is actually likely to go to the downside. And what our entry is going to be based on, it's going to be based on the fair value gap, so a imbalance in the market getting disrespected. So you can see we left a fair value gap right here while we were going to the downside to get this sweep, and then after that all we want to see is for us to actually disrespect it, because you can see right here if we went to the downside, swept liquidity, and now after that we are going to come into this fair value gap and reject from it. That means that market actually does not want to go towards this sweep. But if we actually manage to get the closure above it, like this candle right here, that means that market completely disrespected this fair value gap right here, and it actually wants to go hit this high up here. So after this we are going to enter the market and we are just going to target the high up here. And that is literally it. The strategy is so simple yet so logical, and it's so easily executable on the actual chart. So once again, this is the entry model. We have a fair value gap, and then we want to see a closure to the upside like this. And this is the second example right here. This is a trade towards the downside, so we have a fair value gap right here. So this is the fair value gap, and then after that we have closure down here, because the fair value gap was created while going to the upside, and now we created the closure to the downside. So all we are doing is we are targeting these lows down here and these highs up here. And of course, when we pair this with a manipulation, which is a sweep right here or a sweep or some kind of high up here, it's going to be perfect, and it's going to have about 85% win rate. So with all of that being said, if you like the video, make sure to like it, also subscribe to the channel. It helps me out, just know that I'm doing something right. And let's just get to actual real chart examples. Okay, so here we are at the actual live example. So right now we have few more key details to actually go and figure out. So first one is going to be, once we are on the actual chart, you can trade indices, crypto, forex, whatever you want, options, and it's all going to work with this strategy because it's actual logic of the market. The second and probably the biggest question is, what kind of time frames are we actually going to be trading on? And the simple answer is, first step is going to be done on the 5-minute time frame. So on the 5-minute time frame we are going to actually mark out the key levels, which are going to be the liquidity highs and lows, and then entry model, which I showed you, is going to be done on the 1-minute time frame. So it's very simple. We do the first step of marking on the 5-minute, then we go to the 1-minute, we wait for the manipulation, and then after that we enter the market. So let's actually go into the first step, which is going to be on the 5-minute time frame. All we need to do is mark out highs and lows. So we can see that this is some kind of market movement. If I take this tool, we have low, after that we have high, after that low, a small high like this, and then this is our market movement. So all you need to do is just figure this out, and we have beautiful price movement right here, and all we need to do is mark out low, and then we need to mark out high in the market like this. And now one more thing that I also can do, but it's not that important, I can also mark some kind of bigger highs like this and lower lows like this. So maybe if we just sweep both of them, it's going to be just a little bit of a higher confidence that the market is actually going to manipulate after that, or the same with the other direction. If we manipulate like this and then we manipulate both, it's going to be better to target both of the upside. So now the second step after we mark this out on the 5-minute time frame is to go to 1-minute time frame. So ideally you want to have 2 lines, but I'm going to show you for the sake of the video how I do it with few more actual liquidities on the chart. So I'm on the 5-minute chart right now. We go down to the 1-minute, and before I actually start with the 1-minute, it's really important that I told you this at the beginning of the video. This right here is the market open. So all we need to do right now is to see what the market open is going to do and where is it exactly going to go, to the upside or to the downside. So we want to see a manipulation to a entry. So let's see what the market is going to do. So if I fast forward the market, you can see the actual volume kick in the market open. So we came close to the upside. So let's see what is going to happen. So we actually went to the upside. It looks like we swept the first liquidity. So all we have to do right now is to mark a last fair value gap. So as I told you guys, this liquidity right here is not important as this one right here. So all we need to do right now is look for an entry. So if I mark out this fair value gap right here, you can clearly see this is an imbalance from the first candle's high to the third candle's low. We have this hold, so all we need to do is mark it out, and let's see what the market is gonna do. Okay, so market actually swept this high up here, so we have two highs in total swept. And then after that, what market actually did is just started dumping and it actually closed below the fair value gap. So this means that this is the valid entry for us. So all we do is we enter on the actual closure of the candle. So once this candle actually closes, we just market execute our position, and we can put our stop loss either above the fair value gap like this, which I don't really like because it's way too tight. I like to put it on top of the body or the candle. So in this case, since the body is so huge, we can put it on top of the body like this, and what we do is we target to the downside. Now we can target either the first low like this or the second one like this. It's totally up to you, but if the liquidity is nice and logical, most of the times it will just hit the both. So let's see what actually happened in the market. Okay, so market is playing out, and there it actually is. So we hit the first low and then we hit the second low. And just guys, for the reference, you can see this is 3.18 risk to reward. So let's say we have a $100,000 funded account, we risk 1%, we would actually make $3,180 with this trade right here in front of us. And with such a high risk to reward and such a high win rate, that is absolutely huge. Okay guys, now the second example is in front of us. So all we do is just the same steps as before. 5-minute time frame, we mark out highs. So let's mark out highs. So this is the only high that we see in the market, there is no other ones. So if you mark out, let's say this one, it's not that important because this high is already swept, as you can see. So we then go on to the marking of lows. So we have this low right here, and we can also, let's say, mark out this low, but as I told you guys, only one low and one high needs to be taken for us to actually enter the position. So after we did this, we go on to the 1-minute time frame, and market open is just about to be in, I think, few minutes. Yep. So let's see what the market open is going to do. So market open just started dumping, and looks like the downside is going to get swept first. So let's see if that is going to be the case. So we actually have both sweeps of the both liquidities down here. So right now what we need to do is we need to just look for the entry. So this is the last fair value gap right here. We mark it out, and let's right now wait for a closure of this fair value gap. So let's see how the market is going to do it. So looks like it's going to the upside, but then it rejected. So this is still not a closure for us. So let's see what the market is going to do. So market actually rejected off of it, and now it has actually closed. So what do? We enter the position right here, and what do? We target liquidity to the upside, and we put our stop loss right here. We can put it below the fair value gap. So it's not that important to put it below the stop loss because it's not that tiny of a stop loss. But you can see that this example actually only has 1.38 risk to reward, which might sound bad, but it actually is quite huge with 85% win rate. If you have 1.38 risk to reward on your trades, that still means that you are going to profit around 1.4k on the trade that actually wins. So let's actually see how this trade plays out. So looks like it's going to the TP. Yep, so absolutely just smash the TP to the upside, and that's really it. That's the whole strategy. But I have one more thing before you guys actually leave the video, and that is I'm gonna give you something for completely free. But before I do that, just make sure, if you have found this video helpful, learned something, make sure to subscribe, like the video, comment any questions if you want, I'm gonna answer them. And the free thing that I'm gonna give you is a little playbook of this strategy. So it's 10-page playbook where I note all the kind of setups we can get with this exact strategy. So all you need to do is go down there to the description to actually claim it. And the second thing that may interest some of you is currently I run a one-on-one mentorship, and at this exact moment spots are still available. So maybe if that's something that you're interested in, make sure to go down there, see if you are a right fit, book the call, and maybe you get to be a part of it, where I personally just help you out on your journey. And also the other thing, guys, you can see is my other channel down there in the description, where I just post all of my live sessions, all of the trade recaps, every single trade I execute in the live market, so make sure to check that out too. And that's basically it. I hope you enjoyed the video, and I'm gonna see you in the next one. Peace.